Hello and welcome. The 2025 budget has just landed, and it's brought one of the biggest shakeups to national insurance for self-employed people in years. Now, if you run your own business, this is going to directly affect your bottom line. So to help cut through all the noise, we've teamed up with the experts at My Tax Accountants to break down exactly what these new rules mean for you. That's right. Whether you're a freelancer, a sole trader, or you're running your own limited company, listen up. The way you pay towards your state benefits and pension has been simplified, and frankly, it could save you a decent chunk of cash. So let's not waste any time and get straight into it. Here's what we're going to cover. First, we'll quickly touch on why NI is so important. Then, we'll look at the old system, just for context. After that, we'll dive into the huge change involving Class 2 NI. We'll also cover how to calculate your new Class 4 bill, walk through a real-world example with a freelancer, and finally, we'll wrap up with your key takeaways and next steps. Okay, so first things first. Before we get into all the changes, let's have a quick refresh on why we even pay national insurance. I know it can feel like just another tax, but it's actually your direct contribution to your own future safety net.
Think of it like this. Your NI contributions are building up your record, your qualifying years for key state benefits. The big one for pretty much everyone is the state pension, right? But it also covers other important stuff like maternity allowance. So yeah, keeping your contributions in order is absolutely crucial for your long-term financial well-being.
So to really understand why these new rules are such a big deal, let's take a quick look back at how things used to be. For years, if you were self-employed, you had to deal with this slightly clunky two-part system for national insurance. You had two different types to worry about. First, there was Class 2, which was this fixed weekly amount you had to pay if your profits were over a certain pretty low level. Then, on top of that, you also had to pay Class 4, which was a percentage of your profits. It was a bit confusing, a bit of a headache, and that is exactly what the 2025 budget has set out to fix.
And that brings us to the headline news from the budget for every self-employed person in the country. The government has completely abolished mandatory Class 2 contributions. Now stay with me here, because this is the change that's going to affect most people, and honestly, it's a really positive one.
This slide really lays it all out. Before April 2025, you had to pay that weekly Class 2 amount if you earned enough. It was just a mandatory cost of doing business. But from April 2025, that payment is gone. Instead, if your profits are over the threshold, your contributions are simply treated as paid. What does that mean? It means you get the credit on your NI record, which protects your state pension, without actually paying a single penny for it. It's the benefit without the cost.
And here is the magic number you need to remember for the 2025-26 tax year. £6,845. As long as your self-employed profits are at or above this amount, you will automatically get that national insurance credit for the year. That's a direct saving and a fantastic simplification for millions of business owners.
Okay, but what if you're just starting out, or you have a side hustle with lower profits? Do you just miss out on building up your pension for that year? Well, that's a brilliant question, and the answer is no, you don't have to. There's an option for you.
And here's a pro tip straight from the experts at My Tax Accountant. If your profits do fall below that £6,845 threshold, you now have the choice to make voluntary Class 2 contributions. This is so important. It lets you plug any gaps in your national insurance record to make sure you get the full state pension when you retire. And honestly, it's an absolute bargain.
Look at that. For just £3.50 a week, that's less than a fancy coffee, you can secure a full qualifying year for your pension. For about £182 for the whole year, you protect an entitlement that's worth over £11,500 a year in retirement. It's one of the smartest financial moves you can make if you have gaps in your record. So, with Class 2 now sorted, what's left? Now let's look at the next step. All the focus is now on Class 4 national insurance. This is the main contribution you'll make, and it's all based on a percentage of your profits.
And the calculation is pretty straightforward. First, you pay absolutely nothing on the first £12,570 of your profit. Then, for any profits you make between that number and £50,270, you pay the main rate, which is 6%. And finally, for any earnings above that top threshold, the rate drops right down to just 2%.
All right, theory is one thing, but what does this actually look like in pounds and pence? Let's make it real. We're going to apply these new rules to a freelance designer to see exactly what her NI bill looks like for the new tax year. So, meet Chloe. She's a freelance graphic designer based in London. She works for herself, and all in all, she's had a pretty decent year. After she's tallied up all her income and deducted all of her business expenses, her final taxable profit for the year comes out to a solid £40,000. So, under the new system, what's her NI bill?
Okay, let's walk through this. Her total profit is £40,000. Because that's way above the £6,845 threshold, her Class 2 bill is zero. Simple. But she still gets the pension credit. Now for Class 4. We take her total profit and we subtract that tax-free allowance of £12,570. That leaves her with £27,430. We just calculate 6% of that amount, which gives us £1,645.80. And that's it. That's her entire national insurance bill for the year.
All right, we have covered a lot of ground there. So let's just take a moment to pull all of that together and highlight the crucial points that you really need to remember for the tax year ahead.
So what's the bottom line? Well, for most people, it's a simpler and cheaper system. The key takeaways are mandatory Class 2 is gone. If you earn over £6,845, your pension record is protected for free. If you earn less, you can choose to pay that £3.50 a week to protect it yourself. Your main bill is now just Class 4, and you only start paying that once your profits hit £12,570.
Now, here's a really important bit of housekeeping. Everything we've discussed today is for general guidance. Tax law is incredibly complex, and everybody's personal and business circumstances are unique. So please don't rely on this information alone to make big financial decisions.
Which leads us to one final, crucial question for you to think about. With all these changes, are you absolutely certain that you're making the most of the new rules? And are you confident you're not overpaying? Before you make any big decisions, you really should consult with a tax expert.
And to make sure you are navigating these rules perfectly for your business, we strongly recommend getting in touch with the team at My Tax Accountant. They can provide professional, tailored advice just for you. You can give them a call on 0208 570 8531, or you can drop them an email at info@mytaxaccountant.co.uk. Thanks so much for tuning in.